What's up, everyone, and welcome to the Long Game Podcast hosted by Thomas Kopelman and Jacob Turner. In each episode, you'll hear us break down financial topics that are relevant to you and your situation. Our goal is to help bring credible financial information to you in short, bite-sized episodes.
All opinions expressed on this show are for educational, informational, and entertainment purposes only. Nothing on the Long Game Podcast should be considered advice. Always consult with your team of professionals before making any decisions regarding your finances. Welcome back to another episode of the Long Game Podcast. I'm Jacob Turner. I'm here with my co-host Thomas Kopelman. And today on the show, we have somebody that I'm really excited to talk about. His name's Raj Tut. And what's really cool about Raj is he is a success story in real estate. And I think this is something that will resonate with everybody, is that we often hear of real estate and we often correlate that to success and financial success. But with that financial success, there comes a lot of roadblocks along the way that I think oftentimes we don't see. So I'm really excited to have Raj on the show to be able to talk about what his company Storyboard Living does in the real estate space and how he built that business. So Raj, welcome to the show.
Thank you, Jacob. I appreciate it. So to give you guys, your listeners, some background, I started Storyboard Living about 11 years ago. And high level, what we do is we buy and operate apartment communities. We're super focused on the type of apartment community we buy and hyper focused on the markets or the neighborhoods that we'll operate in.
And then is this just you personally investing? Is this like a fund that people invest into, or like kind of what's the story? How did it start? How did it get to where it is?
Sure. Yeah. So great question. A bit of I think a unique approach in the sense that I started the company on my own, doing deals with exclusively debt, not equity partners. And then recently, so 2024 is when we started to bring in equity partners. So we've done 3 deals this year with equity partners. But prior to that, I grew the company just kind of rolling the same capital. I'm from Canada. I think, Jacob, you know that. So I moved to the U.S. in 2013, about 11 years ago. And I'm sure you guys agree with this, but just so the listeners can hear it from me, someone who's an outsider, the U.S. is the best country in the world. It's the place you want to be if you want to reach the pinnacle of whatever your industry is. So your listeners, I'm assuming, are mainly based in the U.S. This is the place to be if you want to succeed. It could be sports, it could be business, it could be whatever. So I wanted to be in the U.S. I knew one person in the U.S. He was in Highland, Illinois, an hour east of St. Louis. His story is incredible. Not necessarily mine to share, but that's how I ended up in the U.S. I wanted to be in the real estate space. I majored in real estate and housing in Canada when I went to university up there. And I was just looking for opportunities, just your typical entrepreneur story, trying to figure out how I can become this, quote, real estate mogul or person that I had in my mind. The first deal I did was a $13,000 mobile home. Fixed it, flipped it, made all the mistakes along the way, and then did a few single family fix and flips in that same town, Highland, until I was able to get an 8-unit apartment deal under contract. And that's where I started to kind of put the pieces together that allowed me to kind of formulate the strategy we follow today as a company. On a much smaller scale, but it still gave me the building blocks that I think were necessary. And we were kind of talking before we started recording here, real estate, particularly commercial real estate, every single asset is its own business and needs to be operated as such. Real estate is not passive unless you're investing with, a sponsor or general partner that is going to do the work for you.
Yeah, I think a couple things you said really stand out to me. I mean, the idea that, hey, we have this niche inside of apartment buildings, but then it's almost a niche inside of a niche. Like we do apartment buildings, but only in specific areas. And I want to start the conversation around like what you've learned getting into this space, and really with the frame of mind of if you were talking to somebody that really wanted to get into this space today, things that you would tell them. But before we do that, I would love for you to share just a little bit of context on Storyboard. Like, what is the size and scope of the business today? Because I think that'll give the listener context to the lessons that you teach in terms of getting into the business.
Sure. Yeah. So the first year in business, our revenue was, as a company, and when I say it was me, one-man show for the first few years. The revenue was probably 100,000, or less than that. And today, last year, revenue was probably 13 million. This year should be 16 million. So there's been rapid growth from that mobile home. Today, we're at about 20 apartment communities totaling 1,100 apartments, a little bit of self-storage and other types of commercial real estate as well. But those are kind of deals that fell in my lap. So it's primarily apartments. We're based in the St. Louis MSA, Southern Illinois, Central Missouri, and we're buying 40 to 200 unit apartment communities that are 80s or newer, Class B, in Class B areas that are either stable or growing. And then we're buying from mom and pops or out of state owners that utilize third party management. That's kind of our strategy in a nutshell and where we are today. We're also, I mentioned we were a one man team, or I was a one man team. Today, the company has about 33 employees, including myself.
I think like all the words you just said reinforce to me like why niching down is so valuable, right? Like, so I feel like we've finally hit this shift the last maybe like 3 to 5 years where people actually see the value of being like, I know one specific thing better than anybody else, right? Because if you look across anything, whether it's business to investing to real estate, you don't really have a competitive advantage, right? Like there's private equity. I mean, BlackRock is buying real estate, like people are trading stocks, ETFs, et cetera. You don't really have an advantage, but you can in this space, right? Like you might be one of the most knowledgeable people in that specific area of real estate. And that's actually how you win, right? It's how we kind of feel about our businesses, right? Like we want to be the best financial advisors for X specific person because we can solve their problems better than anybody else. Just like you can analyze and find deals probably better than 99% of other people, which I think is kind of, if you take a step back, you realize why real estate is still a hard game, right? And I love the point that you brought up about not only like that it isn't really passive, but also just the story of how you started, right? And so like I think a lot of people go into buying real estate and they make a few mistakes. One of them is they think, well, it's passive, it's super easy, I'm just going to buy it and I'm going to go out and live my life. When in reality, I would still say most real estate deals people end up losing money on, right? Because they just went into it. And then the other thing I see people do is they think, well, the larger the real estate deal, the more money I can make from it. So instead of starting small with an RV or mobile home and learning from it, they go to the $1.2 million Airbnb that can bring in the most cash flow. And it's catastrophic versus just this easy learning experience. So I love the way that you naturally did this of start small, work to some single family homes, work to apartments. And I'm curious, is that what you'd recommend to everybody else? Because I think, right, we're all in this, like, I want to make as much money as fast as I can. And that is not the fastest path to it, but it might be the most surefire path to it.
Yeah, I'd agree with that. You made some great points there. In my opinion, everyone's situation is different. In my opinion, it's really, really hard or possibly impossible to be the best and truly the best at multiple things.
For sure.
So the focus for us is to be the best in that one specific area. And I think we are as a company. I mentioned self-storage and a few other real estate deals as well. I quickly realized, and I was making the mistake that, okay, if I can do this in the apartment side, I can do it on the self-storage side. I'm the smartest guy in the world, whatever. I think a lot of folks that have success early on make that mistake. And what I did instead was I brought on my brother and a childhood friend to kind of run that as a separate division so that they can become the best at that. And to give you guys an example of practicing what I preach, and what I preach is what you said, you should focus on being the best in whatever area of real estate you're focusing on, if you're focusing on real estate, or don't get into real estate or be passive. So, you can look at me, I'm a real estate operator. It's what I live and breathe. And when I wanted to invest in a hotel deal, I invested as a limited partner with someone else that's an expert in that space. I had no interest in trying to learn that business. And I know from my experience, when folks come into my industry and my geography, they miss things. So I didn't want to be the person that's missing things, looking at a hotel deal or looking at another market.
So I'm curious on this topic right here. Like, I think one thing that a lot of business owners struggle with is like, how do we deploy capital, right? Like, because typically your business should be one of the best allocations of capital, right? If you're not producing outsized returns in your business, why are you doing it? Because it has significant more risk than everywhere else. So when these options come to you, I think this is a really good learning opportunity for a lot of people. How do you choose whether you stay in the lane you're at, deploy in the area you're an expert in, or become a limited partner in something else, right? And I think we can apply this outside of real estate. Like it could be same for Jacob and I or any of our business owners, right? Like if we take capital out of the business and we go put it somewhere else, it's either you either want to have more liquidity, maybe safer to be more sure, or it might just be like a diversifier, but it can be challenging to make those decisions.
Yeah, I'd agree with that. So for me personally, for the first 9 years, I strictly reinvested in my company, growing my company, focusing on what we do. And then the last 2 years is when I started to diversify a little bit. I still primarily, like I'm 98% probably exposed to my company. But I started to diversify because one, I had the ability to do so, but then two, I started to think more about wealth preservation instead of just wealth creation. So that changed my thinking a little bit as well. I think it's a tough decision to make, but at the end of the day, when I invested with other folks, it was capital that I was comfortable losing. I don't think I'm going to, but capital I'm comfortable losing because I don't have control over it as a limited partner in those other deals. Whereas in my own deals, I have full control.
I think one thing that you mentioned earlier that's probably the biggest single mistake that I see people that come into, whether it's Thomas or I that have real estate make, is they get a deal and they say this deal is a good opportunity. But then if you ask them any specifics around the deal or why it's a good opportunity, they're just saying, well, somebody told me that this price is a really good price to pay. And it's in some area of real estate that they've had no experience in. Thomas, you're kind of smiling. I think like we've all seen this where it's like, whether it's an Airbnb, whether it's a piece of land that's a new development, whether it's an apartment building, whether it's just a single family house that they're going to rent out, right? They're saying, I had this deal. And what I always go back to is like, there's people like you, Raj, who are experts in your one corner of the market that's saying like, hey, if this deal comes up, we're going to buy it. So one, I always think like, why is that deal still on the market? And two, I think it's really important for people to understand like, you are competing against people that are doing this 24/7, day in and day out. And in your situation, Raj, for over a decade, you're probably going to be doing this in 2 decades and 3 decades. So I think it's really important for people to understand if you're going to go in and you're actually going to operate the real estate as the general partner, you're buying it with your own money and you're operating it. You are going up and you're competing against people that are doing this all day long. So if you're a business owner and this is something that you're doing on the side, I think real estate is an incredible way to build wealth. That's not what I'm saying. But what I am saying is if you're going to go out and you're going to buy it yourself, just understand who you're competing against in this space. I'm curious, Raj, for you, as you guys develop the niche that you're in, right? If you're talking to the guy that's just starting to get into real estate, you mentioned you kind of fell into it, right? Like you had the mobile home park and then you had this and then you had that. And it was like, hey, then we bought our first apartment building. How did you think about the niche early on in the space?
So I wanted to be in the apartment space. I just didn't find a deal early on that I was comfortable with. And I was pretty young, so I didn't have the confidence in my ability to do a little bit of a higher dollar transaction. So that was a part of it as well. But in terms of discovering, refining our niche in the apartment space, it came through a lot of trial and error, a lot of being obsessed and passionate about what we do, trying to find the gaps or the spots where we can have an edge. Because if we're going out and we're buying a brand new Class A apartment community that's 300 units, we have no edge because there's people with a lower cost of capital. There's people that maybe are able to develop those assets at a basis that's cheaper than what we'd pay for them if we're acquiring them. So I had to figure out what our edge could be as a company, and that was very market specific, I think. And through reps, continuous reps, the same thing as a sport, or working out, if you're putting in the reps, you're going to figure out how to be better and get better every single day. And that's kind of the way it worked out for us. I wish I could tell you I came in 2013 and I had this plan to do exactly what we're doing today, but it was refined over the years.
Well, I mean, I think if we're on the topic of, repetition and learning, maybe we talk about some of the mistakes either you've made or maybe just the mistakes that you see most often made in real estate? What would you say those are?
So early on for myself, some of the mistakes were trusting people, just being too trusting of, let's say, letting someone move in without doing a thorough screening, and then taking their word for it when they say they can't pay rent because of whatever scenario. So those are all solved for now through the systems and processes that we have in place as a company. But those are mistakes that could have potentially sank me if I tried to jump into a 200 unit apartment community without the experience that I built up.
I feel like that part's got to be hard. Like if you're a good person, but you also like have to run a good business, and sometimes those two don't really collide well, especially in real estate, right? Like people have hard times. People can't always pay their mortgage. They might be a great person with kids, but you also have a business to run, and as soon as you let that happen one time, it's hard to not let that unravel.
Yeah, it is tough, and it's really just having the policies in place which solve for that. It's, you have to treat everyone the same regardless of what their personal circumstances. And then what the mistakes I see a lot of other people make are kind of similar, or going back to what Jacob was saying about some of the real estate deals that he sees here and there. Um, I see and I hear from a lot of people that come up to me and they say, "Hey, I have a smoking deal in Miami, Florida," and they may live in Toronto, Ontario. I ask them, "Do you not think there are probably thousands of people that said no before that deal came to you?" And I see that happen quite a bit. Sometimes folks pull the trigger and do buy those deals. A lot of times they don't, but that is probably, in my opinion, the single biggest mistake someone can make, unless they're an established operator, someone is established in the space and they want to move into a new market. But if you're a beginner, I would say you need to start in your backyard or change where your backyard is.
I think that's really fair. I also think, not only are you not there, one thing that I see is, a lot of people like real estate for the tax benefits. We work with tons of high income earners. So like they want to use short-term rental tax loopholes and things like this. And it's like, you're not going to live 12-hour drive away from your property and get tax benefits for active participation. Like that's just never going to happen, no matter how much somebody wants that to happen.
So one of the biggest benefits of investing in real estate is the ability to use debt properly and to leverage the asset to create a higher rate of return. Because I think one of the misconceptions I see a lot is people point out real estate's IRR on a certain deal, and they'll say, "Yeah, but understand, like there's some sort of leverage there because you're taking on some sort of debt, which can be used in an incredible way. But on the flip side, it can sink you, much like you mentioned earlier." So I'm curious, Raj, as you guys have continued to grow and you've done bigger and bigger deals and more deals, what are some lessons you've learned in terms of leveraging debt properly in your real estate portfolio?
Yeah, so I can give you an example of a deal, and why one of the reasons why I would never do development. We've done a little bit of development, but I would never uh, tell you I'm a real estate developer, or seriously consider just building apartment communities. So we closed on a deal recently. It was a student housing deal, 349 beds, a total of 121 units. It was built in 2016 for 25 million. Today, the replacement cost was coming out to 39 million from insurance. We acquired it for 11 million. So they were over leveraged, which is why they lost the property. And leverage can, like you were saying, Jacob, it can propel your business or it can destroy your business. So the way we think about leverage as a company, or the way that I think about leverage in real estate, is we're looking to buy assets that have cash flow day one. We're looking to improve those cash flows. And then once we improve those cash flows, we want to tap into the equity we've created. So we'll buy with community banks. The reason why I favor community banks is number one, the community banking system in the US is amazing. But number two, they're easy to work with. And the deals we're typically buying are owned by folks that can't provide all the documentation that a larger lender may need. So the community banks understand what we're doing. They understand the assets around them in their own communities. And then once the asset is stabilized, I'll refinance with Fannie, Freddie, or HUD, so agency debt. And one of the biggest benefits of that is the debt becomes non-recourse. So I'm picking up new liabilities and I have new personal guarantees out there, I'm shedding some of those liabilities with the non-recourse debt as well.
That makes sense.
How do you think about, for you, so 2013 you start, and I always joke with people that, like, if you have no money, the best thing to do is either go buy a business or go get into real estate, because if you lose everything, you're back to where you started at, right? So 2013 you start, you're doing these smaller deals, you're kind of figuring out as you go, you want to be in the space. 2024, I'm going to make an assumption that your net worth looks a little bit different than it looked in 2013. How have you gotten comfortable with risk along the way? And how do you look at that now in the future? Because we talked a little bit earlier around, like, hey, I'm starting to slowly diversify because I want to make sure that, like, I have wealth preservation, not just accumulation.
I'm comfortable with risk because I was gonna say I'm so good, but I don't want to come across that way. We're so focused on what we do, and I'm so focused on what we do that I don't view the deals we do as risky. So I would only sign a personal guarantee, or I would only take on new debt personally if it's exactly in my lane. If it's let's say if it was a hotel deal, going back to that example, I would never sign off on it because I don't understand it. I don't fully understand it, as even if I think I do. So a good way that someone put it to me was just keep knitting. Don't get distracted. Don't look at whatever the next shiny new thing is. Just keep knitting and stay in your lane. And that's exactly what I'm trying to do.
It's hard for a lot of business owners. There's always this shiny object that your friend or somebody else is talking about that you need to do, that you need to invest in, etc. But we got a few minutes left. One thing I want to talk about is, we talked about like mistakes people have with real estate, and I think that's more like direct ownership. Let's talk about investing in like funds or places like you, right? So somebody gets approached, which happens all the time, right? Clients come to us all the time and say, hey, I have this investment. Look at what the documents say, right? And it's like, you can kind of say whatever you want, really, in expected returns and all of these things. And in all reality, they're going to give you the best case situation most of the time. But I'm curious for you, like, what are the things people should look out for as they go into these investment type deals, like maybe some mistakes you see, et cetera?
Yeah, I would say track record, experience. You don't want someone else to learn on your dime, in my opinion. And then also, I think trust is the biggest thing because, like you said, the projections of the documents can say anything. But if you truly trust someone to do what's best for you and your capital, they'll figure out a way, in my opinion, versus someone who may have all the experience in the world or may put together a shiny deck and doesn't necessarily care about whether you make money or lose money. Fees are also a big one. You want your sponsor to be aligned with you and your goals. So maybe they only see their upside or get paid if the deal does well versus them doing well regardless.
What about seeing how much that they're investing in the project? Because to me,
I'd agree with that.
That's the biggest red flag. Like, I had a client talk to me a little bit ago, like they wanted to start a business and they wanted to day one pay themselves a very, very, very healthy salary and basically fund that salary and the business growth through outside capital. And to me, like, that's like biggest red flag number one is if you're not willing to put your own money into this, why would I, right? Like, if it's that good of an investment, if this is something that's going to, bring that great of cash flow or, capital gains down the line, why am I the only one allocating capital and you're not? Like, I think that's biggest red flag from day one.
That's a great point, and I totally agree with that. I think if someone's not willing to put money in the deal, then it's pretty obvious the deal isn't going to make money. And it could look different if it's a newer entrepreneur or if it's real estate sponsor, GP, whatever the case is. Whatever looks like significant cash to them, I think, is important for them to put in the deal.
That's true. There's context around it.
One thing that I think, for you, Raj, and this is not like a hashtag investment advice, but that's really interesting about your business model is that, okay, so you've been doing this 11 years now, but really for the vast majority of that time, you guys were taking out the debt and really betting on yourself. And only until recently have you guys even taken outside capital. And the thing I love about that is, like, when we talk about trust, one of my biggest barometers for trust is, like, have they done this themselves, right? Like, would they put their own skin on the line, right? And I think that's Thomas, for you and I, even in our business, like when we talk to other entrepreneurs, the conversation's a lot easier because we're dealing with a lot of the same stuff in our own business. Like we're already doing it. And I think, Raj, for you, like as you guys have raised capital, I think that's one of the biggest things that builds trust. Like you can point to the previous decade where we weren't taking outside capital and we were betting on ourselves over and over and over again. And I think for anybody listening, like if you're looking at private deals, I don't care what the deck says. You need to trust the person that you're investing with. And that's not to say that every time that you invest in a private deal, it's going to work out because you trust that person. But this is not the public markets we're talking about. Like this is small business America, and things do go wrong, but you need to make sure that the person on the other end of that understands like what they're getting into, and you really have a sense of trust in what they're doing. Because I think, Raj, you made a really great point earlier when you said, when I become an LP in other deals, you mentioned the hotel deal, you're going into it and saying, do I expect to lose every dollar invested? No, absolutely not. I wouldn't invest in it. But I'm also comfortable with the risk that if it does go to zero, I'm fine. And I think that's how you have to look at it with certain private investments.
I'd agree with everything you guys said. I think the beauty of private investments, or whether it's the stock market or something else, you can spread around your risk. So you can potentially invest with different operators, GPs, different deals, and not put all your eggs in one basket. That was my thought process with it. Again, you don't want to lose your money, but ideally place it in a way to where if a deal goes south, you're not totally underwater with all of them.
Yeah.
Well,
couldn't agree more.
Raj, as we wrap up here, where can people find you? And if people are interested in learning more about Storyboard or potentially investing with you, where's the best place for them to connect with you?
Well, first of all, I appreciate you guys having me on. Really appreciate your time. LinkedIn is probably the best bet. Raj Tut, RAJTUT. I believe the URL is It's Raj Tut, ITSRAJTUT. That's what it is on Instagram.
And then Storyboard is storyboardliving.com or something different?
That is correct. We don't publish any investment information on Storyboard Living. It's a resident facing website. We really care a lot about our branding. We don't want our residents to view themselves as someone else's paycheck or investment. So we keep it totally separate. And I don't think anyone would really find any investment related information online, but more than happy to share it if someone is interested. I will say that, and I don't know, I'm sure you guys hear a lot of people say this, but I will say that we're pretty selective about who we bring on because I like to sleep at night.
I think that's great advice. I think if I've learned anything from this, it's in real estate, just like anything else, like the power of a niche is real. And I think you need to understand when you're investing money, no matter if it's the public markets, the private markets, real estate, as an LP, as a GP, you need to understand either what your edge is or what the edge of the person that you're investing with is. So guys, as always, please rate, like, and subscribe. Thomas and I are always looking for new topic ideas as well for the long game. So if you have topic ideas that you're interested in learning more about, send us a message on Twitter, send us a message on LinkedIn, and we'll be sure to include those in a future episode. Until next time.